Oil has surged to around $109 at the same time. Dow Jones futures are down nearly 1,000 points, signaling a sharp reaction from markets even before the opening bell. Whenever oil spikes this quickly, markets tend to panic first and analyze later. Higher energy prices raise fears of inflation, slower economic growth, and tighter financial conditions. That combination rarely makes investors comfortable. But the real question for individual investors is simple. What should you do? The answer may sound boring. Do nothing. The first mistake to avoid is panic. When markets react to sudden geopolitical shocks, the first wave of selling is often emotional. Algorithms trigger stops, institutions reduce risk, and headlines amplify fear. But the open is rarely the moment when rational pricing occurs. The second mistake is chasing oil stocks. When oil surges suddenly, investors rush to buy energy companies assuming they will immediately benefit. But history shows that oil spikes above $100 are rarely sustainable for long periods. High oil prices eventually slow demand, pressure the economy, and encourage new supply. We've seen this many times before. Oil surges during geopolitical stress, then gradually falls back to more sustainable levels, often somewhere around the $60 range. Buying oil companies during peak panic can mean entering just as expectations are already priced in. The third mistake is rushing into technology stocks on the dip. Many tech companies are already trading at stretched valuations. In an environment where energy prices are rising and uncertainty is growing, highly valued stocks can become even more vulnerable. When markets are expensive and volatility spikes, forced action increases risk. Cash in moments like this is not weakness. Cash is patience. Cash is flexibility. Cash is optionality. If markets stabilize, opportunities will appear later. If markets fall further, preserving capital will prove valuable. Oil at $109, Dow futures down 1,000 points. Markets will be loud tomorrow. But discipline is quiet. Sometimes the smartest move is doing nothing. Conserve your cash. If you value calm, disciplined market analysis without hype, subscribe to Market Signals and stay ahead of the cycle.